What's good, guys? It's your boy Frankie T, and today we're going to be talking about trading versus investing. Something that's been usually asked, and what it is and how it works. So there are two really distinct differences with investing and trading. Some people kind of mistaken that. So when it comes to, I'm going to talk about trading first. So one of the first key concepts with trading is that you are in the market for short periods of time. So you're looking in for short-term fluctuations of price in the market. You probably have maybe a lot of leverage going on to make some money, depending if you're trading like Forex or stocks. But the whole goal with trading is that you are looking to profit and maybe hold for not too long, maybe a week, maybe a day, sometimes even a few hours. You're just trying to get some quick money. So the pros of this is that you can make quick money. It's like a get rich quick kind of thing. I don't really hate that term, but it enables you to make money faster than maybe the average Joe, because maybe depending on how much you put in a trade, or if you're investing in stocks, you can be making maybe $400 in a trade. But on the con end, you can lose just as much money trading different assets and whatnot. So keep that in mind. So as far as in the investing side, when it comes to investing, there's some core concepts. A lot of investors, people who invest, they kind of have a buy and hold mentality. They typically have do a lot of research into something, a specific stock or something, and they will generally hold, if they don't buy and hold, they'll hold their stocks maybe a year, 2 years, 3 years. They're looking toward the intrinsic value of a company. They're looking at a company based off its intrinsic value. So they see that a company is worth something, and right now it's cheap. So they say, oh, you know what? This company is cheap. I'm gonna buy this now. I think it's gonna be at $40 in 2 years. An $8 stock is gonna be $40 in 2 years. So, in that being said, in that $8 stock, they see that $40 price, they'll hold it for 2-3 years, or whenever how long it takes to get to that price. So when it comes to being a investor, the pros of that is that you generally don't have to look at the markets or look at the charts, all these different charts and whatnot, because a lot of people, they look at that and it kind of scares them, and they're like, they don't even understand what's going on. So if you're an investor, you don't really care about the short-term movements in price. You're just worried about the balance sheet, the income statements, the cash flow statements of a company, and how much money they're making, what's their profits, what's their revenues, are they being innovative, who are their CEOs? Am I investing in an Elon Musk, or am I investing in like a con artist? These are different things that they take into consideration. How are their earnings? Or their PE ratios? These different statistics that they're looking at as time goes by, quarter by quarter, looking at how things are going. They're not going to be worried about these short-term fluctuations that are going on, in a day or 2 days. That doesn't really impact them, because again, they are there for the long run. And obviously, when it comes to investing, you're trying to get ahead. You're trying to be in a movement before the main people are in that movement. You know what I'm saying? If that makes sense. You don't want to buy into, they don't typically buy into any type of hype, when things are popping, like say Dogecoin, with the SNL and all that stuff. They're not looking to just buy in there. They're very patient. They're very patient people. When it comes to investing, you have to be patient. You have to, in fact, sometimes even have to go through deep losses. You may be taking certain L's, but because that, hey, I think this company is going to be worth XYZ, or I think that the world is going to be moving towards this certain direction. They may be using 5G, for example, or EVs. For my case, where I'm investing in EVs, I'm not really worried about what it's doing within the next year. I have at least at most a 30-year play for some of the companies that I'm invested in when it comes to electric vehicles or cloud infrastructure. So all depends on what it is that you're on what it is that you're viewing, what different kind of asset class or whatnot that you're looking at. You know, some of the prime time investors like Warren Buffett, Charlie Munger, these are great people that, you know, are very much followed, you know, with what they do. Or they were people who bought and they just held long term. They were able to acquire businesses and just really look at the cash flow statement. They're analytical, you know, they're very analytical people looking at how much revenue they're making, how much debt do they have, all these different factors. So, you know, that's the investing side. And I guess I'd say the cons to it is it's a get rich slow kind of thing. You know, you're holding a company for the long run. You're seeing the slow, you may see the dips, you may see the rises, and you may see the dips again. You know, you're going through a whole slow process. It's a slow grind process, you know, and you're not expecting much to happen in the near future. So you're just continuously putting money until when that time comes, you have a huge position and can get some serious gains and serious profits from it. You know, example, like I said, for me is that I am very bullish on like 5G, cloud infrastructure, like I said. So I'm holding these to the long term, as well as the S&P 500. I have a Roth IRA where I just put money into it and I hold it for the long term. You know, if you don't know what an Roth IRA is, I'm gonna link a video where I explain it briefly. But you know, it's something that I do with my accounts with VOO, one of these Vanguard Index S&P 500 stocks or index funds, and I hold that for the long term. I don't plan on selling it anytime soon, you know, and I see the growth. At first, this is very minimal profit, but I'm starting to see as time went by, because I've been investing in this for about 2 years now, so I'm kind of seeing some good returns, but continuing to hold and keep holding for as long as I can. So on the trading side, you know, some great investors when it comes to trading is like Peter Lynch. I believe he was a really great hedge fund manager, you know, getting those short-term fluctuations. I'm sure maybe there's some hedge fund managers that also hold these things long-term as well. This all depends, but he was a great, you know, person that made a lot of great returns from the stock market. But again, when it comes to trading, whether it's trading, investing, I think the key thing that people need to realize before they want to start investing or trading, whether it's the stock market, Forex, is that you need to have patience. Patience is one of the key things in this industry. You know, if you don't have the patience, maybe you want to go towards trading, but again, that can still screw you, because you may start doing FOMO. You may, if you're missing out, you may start, you know, getting into positions where you didn't need to get in at this time and it wouldn't meet your rules. So it's very important that whether you're trading or investing, you have that mindset cater to the style that you trade. And then as well, you have a plan on how you're going to execute a trade. How are you gonna leave a trade? How are you going to get into a trade, you know? And when is enough enough? You know, when are you gonna stop? You wanna have these different barriers in place, because as us with human emotion, as human beings, social creatures, you know, our emotions are always fluctuating. There are what days we wake up we feel good, or days we wake up we feel bad. So you want to have a blueprint, so that as you're going through that journey, you know when to take your losses, you know when to take your profits and go, or your losses, and start to look for a different play. Or if you just buy and hold, that's your strategy. I'm just gonna buy and hold, and you know, once I get maybe 50% return on my investment, I close the trade or the investment, whatever it is. So, you know, you want to always figure that out, and what you are. You know, for me personally, when I first came into the markets, I was investing, and then I got into Forex, so I've been more focused on the Forex end, but I still invest in the stock market. So I don't trade the stock market. I'm in the stock market for the long run, whereas Forex is just a short-term thing that I'm doing to make quick profits on the side. So hopefully this kind of makes sense to you guys. You know, I just wanted to break it down as simple as possible to the people that want to understand the difference between trading and investing, because there certainly are the difference. You know, people, when they talk about it, it's generally about the same thing, like the markets and whatnot, but you know, those are like the two main paths that you get into when you are getting into financial markets. So again, hopefully this helped for you guys. So, you know, if it did, go ahead and like, comment, share, subscribe. I really appreciate all those who, you know, are liking, commenting, watching these videos. And I hope you guys have a wonderful day. Be safe out there. Peace.
2 times.
Hey, T-Mills, hey, I need that guap in my hand. 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 I need that guap in my hand.